Hey, everybody, and welcome to Breaking Biotech, everyone's favorite biotech podcast. My name is Matt, and thank you guys for being here with me today. Please like, subscribe, or leave me a comment. Appreciate that. You can also follow me on Twitter at Matthew Lapoire, and I do have been a little bit more active lately, so you'll see my updates there. But glad to be here with all you wonderful people. It's been a great week. A lot of exciting news has come out, as well as some good rumors, which you don't always see, and those even continued into the weekend with the rumor that Roche is going to be buying Spark Therapeutics. So, going to talk a little bit about that. Going to talk about Sage, which I think has some upcoming catalysts that are going to increase the stock price, and going to talk about the Intercept data, the phase 3 NASH data that came out, which was good. It was mixed, but it was good. So to start off, going to talk about the macro environment a little bit, and really it's just a few things that I'm looking towards this week. One of them is this finance committee hearing on prescription drug costs. So CEOs or executives from a bunch of these big pharma companies are going to come and talk about, they're going to get grilled by the senators. And a lot of times, I don't think anything's really going to come of this. It's really just so the politicians can have that sound clip of them berating the evil drug companies and their greedy practices. So we'll see. But I think it is interesting to see the arguments that the politicians have against the companies and how the company is trying to rhetorically pivot away from that. And yeah, so we'll see. But the other thing that this week we're going to look out for is this continued anticipation of a Chinese-USA trade deal, which has not come out yet. And it really seems like there's just continued hype over this deal coming. And, it's going to be the best deal. It's going to be a great deal. Of course, the reality is that, both sides are feeling the pressure to just get a deal done so that they can go back to their respective side and say how great they were in negotiating and winning the trade war. So I think this is going to end up being a sell the news event, not to the extent that we're going to retest the lows of December, but I think the market has sufficiently priced in the outcome of a trade deal here. And if we go to the XBI real quick, this week we were able to touch just above 87. And then we retraced down to about 84, and we're slowly making our way sideways in that mean. So we're starting to see these higher highs and these lower highs, higher lows is what I mean. So it's overall a good, stable increase in the market. We're not seeing this crazy ramp up that seems to be happening in the SPX, but yeah, anything can happen. But I do see the support that's starting to hold, and I'm going to be following that. I still have my XBI position, and I'm not really adding to it. I'm just adding to companies that I like in that regard. Okay, next thing that I wanted to mention is that Powell's going to be testifying before the Senate Banking Committee as well as Congress today. So you get 2 days of Powell talking, which is much more Powell than I want to listen to. But he's likely, in my opinion, going to continue his dovishness and talk about how the Fed is going to be data dependent and they're going to be very patient. Powell loves saying patient these days. So watch that if you've got nothing better to do. I'm also going to be looking out for some housing data this week. So building permits coming out on Tuesday as well as pending home sales on Wednesday. Housing is a leading indicator for the markets and the economy overall. So I like to keep an eye on that. The ADP non-farm payroll should be coming out as well. And the biggest one of all of these is the US GDP number for Q4 is going to come in on the last day of the month. So I think if this number does not meet expectations or exceed it, I think we could see a bit of a retracement in the market. So Thursday could be volatile. All right. So let's get to the good stuff. Intercept, Regenerate NASH trial, phase 3, very dramatic. After the Gilead failure, the week before, Intercept has released their data, and they looked at NASH in F2 and F3 patients, as well as F1, which I wasn't expecting. So their drug, for those who don't know, is an FXR agonist, and they've shown in mice that FXR agonism can improve fibrosis in mice and mobilize fat in the liver. And when they did these studies in humans in phase 1 and phase 2, they saw positive results. So this is the result for their phase 3. And what they saw was in fibrosis, they got an improvement, but in NASH resolution, they did not see an improvement, at least in F2 and F3 patients. In F1, they did see an improvement in NASH resolution at the high dose, but I'm not sure how they're gonna, how they're gonna use this to get the indication for F2 and F3 patients. But basically, to dive in a bit, the fibrosis improvement, they saw 23.1% of patients got 1 or greater stage improvement with no worsening of NASH, compared to 11.9% in placebo. The low dose OCA was not very effective, p-value 0.04, so you could say it's significant, but I don't think they're going to really hang their hat on that too much. With the stage, so I think this is the no worsening of catch. Yeah, so the NASH resolution, they didn't see really an effect. It was very mild and not significant, unless you looked at the F1 patients. So it seems to me that they're going to be putting together this entire package of positive benefits that OCA has for the FDA or the advisory committee, depending on what goes on. And basically, they're going to have this list of benefits and try to get as many indications as possible. So I don't know if they're going to try and get an indication for F1 NASH patients, but it looks like they're setting up some safety nets so that they can try to get as much as they can. So we'll see how they try to present it. And I think the attempt to get as many benefits here is due to the fact that they don't see an improvement in NASH resolution for the F2 and F3 patients, as well as the side effect profile. So if we see here, 51% of patients reported pruritus in the high dose, but they only saw a dropout rate of about 8.7%. So overall, this is a very high incidence in my opinion, but the dropout rate is decent. So they're not seeing too many patients actually drop out from it, but keep in mind that this is only, I think it's like an 18-month trial. So, I don't know if patients are going to want to stay on this drug for the rest of their life if pruritus is going to be that prevalent for them. So that's kind of the bear case. The bull case is, this company's had to manage pruritus before in their other indication. I forgot the name of the diseases, but OCA is already approved for something else. So they've been able to manage it in a lot of those patients. So I think it's possible that they can do this, but lifelong treatment, I don't know if this is good. Given this, they did mention in the call that they're considering getting approval for dose titration. So to make it easier for patients to get to these, to manage these side effects, they're going to do a dose titration. So start at 5 for a bit and then go to 10 and then go on. But if patients start to get a maximum tolerated dose of only 10 or 15 milligrams, they're not going to see an improvement in NASH, which is what we see here. So the 10 milligrams, it's a slight improvement. So I think that the dose titration could be good, but they're not going to see patients stay on the drug if they can't hit that 25 milligram dose. So we'll see how that goes. The FDA might approve that. The LDL-C increase was interesting. So they saw that at 4 weeks, they got an average increase of 23.6 milligrams per deciliter. And then this approached baseline by month 18. So it's good that they saw normalization of these levels, but this increase is not very positive in my opinion. They did say that the major adverse cardiovascular events were balanced between the groups, which is good, but we don't know exactly how long it would take for whatever increase of LDL-C would actually have an effect on these events. The intuitive thing is you would expect to see them pretty soon, but you might need a longer term cardiovascular outcomes trial to actually see whether these events present themselves. So I think a CVOT trial can be like 5 to 6 years, whereas if they only looked at month 18, these patients might start seeing the effects of this increased LDL-C, by year 3 or year 4. So I think it's good that they got normalization of this, but I don't think a lot of doctors are going to be excited about getting these patients that have a lot of risks already for cardiovascular disease to get this big an increase in LDL-C. We also don't know how many of these patients had to take statins to bring this down, and they're going to present that data at EASL on April 10th to the 14th of this year. So I'm excited to see the expanded data. If the stock rallies from where it's at now, this could be a huge sell-off event if this data shows anything negative. So I personally am looking out for type 2 diabetes incidence after OCA treatment, statin usage. They did mention that the MACE events are balanced, but I'd like to see the actual breakdown. And we're also going to see some lipids, so see whether or not triglycerides increase as well or not. So It will be nice to see this expanded data on this date, and I think it could be a significant driver of the stock moving forward. And we also don't know yet whether or not there's going to be an advisory committee, which is possible, but we'll see from then. So what the stock actually did after the data was released is it hit a high of 124, and then it dropped down to about 91, and I think it's hovering around 93 right now. So it's sitting around 2.7 billion market cap, which is very close to Madrigal actually, and Intercept is about a year or two ahead of Madrigal at this stage. So I think investors are a little bit scared based off the questionable efficacy as well as the side effect profile. So until some of this uncertainty becomes clarified in the next year or so, I think the stock's probably going to trade range bound around here until we see some updated data at EASL, which if it's not all positive, I think we could see further downside. So the two NASH companies that I like are Viking and Madrigal. Viking has done a fatty liver study in phase 2. They didn't really do fibrosis, so that's something that I'm looking forward to seeing that data, and I think their market cap's going to come up a lot closer to Madrigal if they show an improvement in fibrosis. But they did see an amazing improvement in decreasing liver fat at 12 weeks, which Madrigal has also shown with their drug. But Madrigal has also shown improvements in fibrosis and NASH resolution. So NASH is definitely ahead of Viking at this point, and they're beginning their phase 3 study pretty soon for NASH. And I don't think it's confirmed whether or not they're doing a phase 3 in dyslipidemia, but the drug does show very good blood lipid improvement with MDGL 3196. So I'm looking forward to seeing this data, but I think Intercept does have a decent chance of being approved by the FDA, but whether or not the payers are going to cover it and whether or not doctors are going to want to prescribe this drug, I'm very nervous about it. And so it's what's keeping me away from wanting to short or go long the stock, just because of so much uncertainty. So we'll see, but very interesting data, definitely. And yeah, gonna keep an eye on it anyway. All right, next thing I wanted to talk about today was Sage. So Sage is a company that has a couple drugs for depression, different types of depression, but it's basically one drug that modulates the GABA inhibitory pathway. So brexanolone, which the drug itself, I forget the commercial name, but they came up with brexanolone, and it works as an injection, and then they've made another iteration of the drug called Sage 217, which you can take as a once daily oral pill. So brexanolone saw positive results, and they have a PDUFA date on March 19th of this year. So I think the FDA will approve the drug, and they're going to then launch it in June of 19. So I think that once this gets approved, the stock will jump on the news, because there's been some uncertainty, and I think just with depression drugs, there's a lot of concern that some of them can have these negative side effects. The advisory committee did vote, I think 17-1 to approve, so it should be a positive day for them, and they're going to see that approval date. If this does go wrong, we should see some good data for phase 3 in major depressive disorder, as well as phase 2A in bipolar disorder for their better drug called Sage 217. So I think these are going to be good readouts for later on. They have a ton of cash, which I think is going to perpetuate them to be able to develop the drug as a revenue producing asset. And a lot of patients are not happy with the current depression drugs that are out there. There's a lot of side effects associated with them that I think Sage can come in and be a good alternative for people. So I like Sage, and I bought it on the dip because I noticed that they were they were coming down a bit, and I saw some support there. So I jumped in, but I'll show you that in my portfolio wrap up, which I noticed is not up yet. Okay, the last thing I wanted to talk about was buyout rumors. So a lot of people really like M&A in biotech, and I personally, I think I kind of hate it, only because it's impossible to predict, really. You can like think that you can predict certain, companies that might be a good fit for some other company or companies that might be good, attractive takeovers. But I just feel there's so much uncertainty in that regard that I can't really predict it well. And maybe you guys can, but I'm just bad at it, I guess. So we saw that Amarin was a potential contender for Novartis, and I don't know if any of these rumors are true. Novartis has been on a tear with their acquisitions, so why not add to their portfolio with a good drug? I personally think it's much smarter to bet on the company because you believe in their product and you believe in the company moving forward, not really on the chance that they get bought out necessarily, but you do want that as an exit strategy if the company can't itself move their drug forward. So if the company isn't able to raise any more money, then you'd want them to get bought out because they're not going to be able to do anything with the drug that they have, even if the drug is good. But yeah. So apparently there's a rumor going on with Novartis and Amarin, which is good. I still have my shares and haven't sold, although I am happy with the newfound value of my Amarin shares. So yesterday, like I mentioned earlier, we saw that there's a rumor going on that Roche is going to be buying Spark Therapeutics, which is good, at least for the gene therapy world. I think it'll probably boost all the gene therapy stocks a little bit this week, even if we don't see any real tangible news. But it shows that the large cap bios are starting to accept gene therapy and think of it as a good prospect for the future. So I like that. I'm disappointed that I only have 10 shares of Spark, but it is what it is. So the other thing that I wanted to mention is that this week I'm looking at the Sarepta data, which should come out. They're going to show the limb-girdle data when they present their Q4 2019 results. I don't think I've seen this before necessarily, like an update with new results and their earnings, but I think they're doing this because the financials might be disappointing, but the actual limb-girdle data will be good, so it'll even out the whatever stock movement. But I do think that it's going to be a net positive stock movement that we see here. All right, so last thing I wanted to do was just go over a quick portfolio update. And I did add some Madrigal as well as some Viking. And then I did take some positions on Sage, BioMarin, and Catalyst Bio. So I didn't talk about BioMarin, but they're a gene therapy company that I've been interested in a while. And I thought that the dip on the stock earlier this week after their earnings was a good chance to buy. So going to be holding them for a while. I might just do a talk on them in the coming weeks just to show why I think they're a good company. So yeah, Sage, I mentioned what I'm looking for there, and Catalyst Bio, I'm not going to see Catalyst for them for the next few months. But otherwise, I'm pretty happy with the portfolio to date. We're at around 7.5% on the year, which is catching up to S&P 500, but still pales in comparison to the XBI since it went on that massive tear in the earlier part of the year. So yeah, volatility continues to get crushed, although we saw a bit of a spike in the XBI vol, so we'll see if that materializes into anything. But it really looks like we're starting to hit the maximum downside in volatility. So this might just, until we see a big event come on, this is kind of where volatility is going to hang out until there's something dramatic that goes on. So we'll see. But yeah, I want to thank you guys so much for watching. Please like, comment, or subscribe. Would really appreciate that. And you can definitely follow me on Twitter, where I've been tweeting a lot more at Matthew Lapoire. So with that, going to wrap up. But we'll see you guys next time.